What if I told you the money in your wallet isn't money at all? Not in the historical sense, not in the legal sense, not in the economic sense. What if it's something far stranger? A promise, a claim, a debt created out of thin air, backed by nothing, and yet treated as the foundation of global civilization. Because there was a moment, a precise moment, when paper promises replaced real money and nobody noticed. Not the public, not businesses, not even most governments. And from that moment on, the world entered a new financial era, an era where value isn't earned, it's declared, where wealth isn't stored, it's digitized, where debt isn't a burden, it's the engine. This is the story of how money stopped being real and why the illusion still works. To understand this transformation, we need to step back to a world where money was physical, tangible, and limited. Gold, silver, hard metals. For thousands of years, humans trusted precious metals because they couldn't be printed, couldn't be faked easily, and couldn't be created by decree. Money was something you held, not something you imagined. Then came the first major shift. Merchants, kingdoms, and early bankers realized something. Carrying metal was risky, heavy, and slow, but carrying a claim to metal that was easy. So promissory notes were born, the earliest paper money. But here's the twist. They weren't money. Not yet. They were IOUs, receipts, claims to real wealth, stored somewhere else. And the people who issued these notes, they discovered a dangerous power. If nobody came to redeem their gold, they could issue more paper, and more, and more. This is where the story begins, with a quiet shift from money to representations of money, and a small group of people realizing how profitable this shift could become. Names like John Law, the financial alchemist of France's disastrous Mississippi scheme, the Medici, masters of early credit systems, the Bank of England, founded to fund war through paper credit, Alexander Hamilton, who centralized US debt to give paper money power. These figures weren't just bankers or politicians. They were architects of a new reality, a reality where paper promises could move faster, scale bigger, and control more than gold ever could. But even then, nations were still tied at least loosely to real metal, until one day, they weren't, and that day changed everything. The origin of the shift begins with a simple problem. Gold doesn't multiply. Governments need money that does. Wars cost money. Empires cost money. Ambition costs money. But gold supply grows slowly. Sometimes only a fraction of a % per year. Paper, on the other hand, paper is infinite. So governments partnered with banks. Banks held the gold. Governments issued the notes. Citizens used the paper. But here's the secret, no one explained to the public. Paper was only redeemable as long as people believed redemption was possible. If everyone came at once, the system collapsed. And sometimes, it did. Panic, bank runs, crashes, defaults. Each crisis taught governments the same lesson. Real money limits power. Fake money expands it. By the late 1800s, the world's most powerful nations quietly embraced a hybrid system. Gold in theory, paper in practice, and the more paper they issued, the more they needed a central authority to manage it. Enter the central bank, a silent referee with the power to manipulate interest rates, create credit control, currency expansion. Rescue banks manage national debt. Central banks weren't created to stabilize economies, they were created to stabilize governments. And stabilizing governments requires a very specific kind of money, money that can be created at will. By the early 20th century, the world was on a financial tightrope. Gold still existed, currencies were still backed, but the backing was getting thinner. Then came the ultimate accelerator. World War I. European powers needed unimaginable amounts of money, fast. Gold couldn't keep up, so governments simply printed paper, suspended convertibility, and hoped the illusion would hold long enough to win the war. Once that door opened, it never closed again. Then came World War II, another tidal wave of spending. But after the war, countries needed a global anchor, a symbol of stability, a currency everyone could trust. So in 1944, the world signed the Bretton Woods Agreement declaring the US dollar would be backed by gold. Everyone else's currency would be backed by the dollar. A brilliant arrangement, as long as the US had the gold to back its promises. But it didn't, because behind the scenes, America had begun spending far more than its gold reserves justified. Wars, programs, loans, expansion. Dollars flooded the world. Foreign nations noticed the imbalance. They started redeeming their dollars for gold. Gold drained out of the US Treasury, and then, everything broke. The year is 1971. The US is bleeding gold. Nixon faces a choice: admit the dollar is overissued and devalue it, or sever the link between dollars and gold entirely. He chose the second option. On August 15, 1971, Nixon announced, "The United States is temporarily suspending the gold window." Temporarily. That word was a lie. Gold redemption never returned. In that moment, the US dollar became something entirely new. Not gold, not silver, not even a claim. It became a fiat currency, value by decree. Money became whatever governments said it was, and the rest of the world followed. One by one, nations abandoned gold. One by one, they embraced unlimited, unbacked currency. This was the moment money stopped being real. This was the moment paper promises replaced value itself. But something even more powerful happened. Money stopped being a store of value, and became an instrument of control. Once money lost its anchor, governments unlocked a new superpower. They could borrow forever. Debt no longer needed discipline. Borrowing no longer required gold. Spending no longer needed limits. The result, a global explosion of debt. Government debt, corporate debt, household debt, bank debt, shadow banking debt. Debt became the world's most profitable product, because when money is debt, you can never pay it all back. Here's what changed. 1. Governments could now borrow without consequence. Inflation became a hidden tax. Citizens paid the price without understanding the mechanism. 2. Banks no longer lent money they had. They lent money they created. Through fractional reserve banking, $1 became $10, then $100, then far more. 3. Asset prices inflated endlessly. Real estate, stocks, bonds, everything rises in a system where money can multiply infinitely. 4. Wealth began flowing upward. Those closest to money creation, banks, hedge funds, governments, benefited first. Everyone else paid later through inflation. This period gave rise to massive housing bubbles, stock market manipulation, currency crises, IMF bailouts, global inequality, shadow finance, complex derivatives, trillion-dollar central bank rescues, and yet, most people didn't notice. Because the illusion still worked. Money still bought things. Prices rose slowly enough. Economies seemed stable. But beneath the surface, something was rotting. The system had changed. Money was no longer wealth. Money was debt that someone owed to someone else. Every major crisis since 1971 has been an attempt to patch the consequences of unbacked money. 1980s, Volcker lifts interest rates to kill inflation. Inflation shrinks, but debt becomes more expensive. 1990s, derivatives explode to manage risk. Instead, they multiply risk. 2000s, housing becomes the engine of growth. Fictional wealth replaces real productivity. 2008, the system collapses. And how is it saved? With more of the very thing that caused it. Money printing, debt expansion, zero interest rates. 2020, a global shutdown triggers the largest monetary creation in history. Trillions created in months. Markets explode upward. Inflation follows. Every fix requires more stimulus, more credit, more debt. Because now, the system can survive only on expansion. If debt stops growing, the system collapses. This is why governments can't stop borrowing, why central banks can't stop printing, why inflation never truly goes away. The system isn't built to stabilize, it's built to expand. Today we're seeing the consequences of 50 years of paper promises. Shocking data shows, global debt has reached over $300 trillion. 75% of all US dollars in circulation were created in the last 20 years. Real wages haven't kept up with inflation for decades. The average house is now 8 to 12, the average annual income. Banks hold only a fraction of deposits, the rest is credit. Digital money is replacing cash, making money even more abstract. The world is repeating the same patterns: overcreation of currency, rising inflation, dependency on debt, central banks propping up markets, governments addicted to printing crises, followed by bigger rescues, wealth concentrating at the top, people losing purchasing power quietly, year after year, just like before. Because the underlying system hasn't changed. We no longer use money, we use claims on money, promises of value, debts someone else must pay. The illusion works until the promises exceed the belief. And today, belief is fading. So what do we learn from all this? What happens when money becomes a promise instead of a substance? Here are 3 clear takeaways. Takeaway 1. Money is no longer a store of value, it's a tool of policy. It expands or contracts based on political decisions, not economic reality. Takeaway 2. Debt is the foundation of modern economies. Governments, corporations, and individuals all depend on borrowing to function. Debt isn't a flaw, it's the product. Takeaway 3. Inflation is not an accident, it's a mechanism. A quiet extraction of wealth from those who save. To those who create currency, we are entering an era where money will become even less real. Central bank digital currencies, programmable money, instant monetary expansion, fully digitized value, decreasing privacy, increasing control. The shift from gold to paper was invisible. The shift from paper to digital will be even faster. The question isn't, will money change? It's, will anyone notice? If you want to understand how the modern financial system truly works, how debt became the world's most powerful product, and how money continues to evolve without public awareness, subscribe, like this video, and share it with someone who still believes money is what it used to be. Because once you understand the illusion, you can finally stop being controlled by it.